Welcome to the Riskwiser Zone. I'm your host, Lewis. As we begin this new week, markets are holding near record levels despite rising geopolitical tensions. The S&P 500 rose slightly, while the Dow Jones Industrial Average fell marginally, and the Nasdaq Composite also saw a slight increase. Technology stocks were among the strongest performers, with semiconductor companies like Nvidia, Broadcom, and Micron Technology making significant gains. But it's not all smooth sailing. Regional U.S. banks have reported mixed earnings, with PNC beating Wall Street's targets, while Regions Financial missed forecasts. And outside of banking, transport company J.B. Hunt Transport Services reported mixed quarterly financial results. These updates are crucial in helping us understand how consumers are spending their money and how businesses are operating amid economic concerns brought on by inflation and tariffs. Meanwhile, crude oil prices have rebounded after dropping sharply on Thursday, with U.S. crude oil rising to $59.44 and Brent crude rising to $64.13. Gold prices, often seen as a safe haven, fell slightly but remain up over 5% so far in January. And in the bond market, Treasury yields moved higher, with the 10-year Treasury yield rising to 4.23% and the 2-year Treasury yield rising to 3.60%. As we look ahead to next week, Wall Street will be watching closely as a broader mix of earnings are released from airlines, industrial companies, and technology giants like United Airlines, 3M, and Intel. The Federal Reserve's next policy meeting on interest rates is also just around the corner, and all eyes will be on whether they maintain their current benchmark interest rate. In other news, Taiwan's benchmark index rose 1.9% after signing a trade deal with the U.S., despite protests from China. And Canada has agreed to cut its tariff on Chinese electric cars in return for lower tariffs on Canadian farm products, highlighting the ongoing uncertainty surrounding global trade. As we take a step back and assess the current state of the markets, it's clear that there are many factors at play. From geopolitical tensions to economic concerns, investors need to stay informed and adapt to changing circumstances. That's why we're here to provide you with balanced and unbiased analysis, helping you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of finance and technology, where the lines between progress and risk are constantly blurred. Today, we're exploring a significant development in the semiconductor industry, as well as the energy sector, which has seen considerable volatility lately. In recent news, KLA Corp saw a substantial surge of over 7% after announcing its plans to boost capital spending in 2026. This move is part of a broader trend in the tech industry, where companies are investing heavily in research and development to stay ahead of the curve. Applied Materials and ASML holding NV also experienced significant gains, with increases of over 6% and 5% respectively. This uptrend suggests that investors are optimistic about the future of semiconductor technology and its potential applications. On the other hand, the energy sector has been facing challenges due to plummeting oil prices. Devon Energy, APA Corp., and Occidental Petroleum all saw their stocks decline by more than 2%. This downturn can be attributed to the current surplus in global oil supply, which has put pressure on energy producers and service providers. Additionally, cryptocurrency-exposed stocks experienced a decline after the U.S. Senate Banking Committee delayed its discussion of the Crypto Market Structure Bill. Coinbase Global and Riot Platforms saw their stocks fall by more than 4% and 3% respectively. In other news, Calavo Growers stocks soared by over 13% after Mission Produce agreed to acquire the company for approximately $27 per share in cash and stock. Talon Energy also made headlines with its agreement to purchase 3 natural gas power plants from Energy Capital Partners for $345 billion, resulting in a stock increase of over 12%. Morgan Stanley reported impressive Q4 FICC sales and trading revenue, exceeding consensus expectations. The company's stock rose by more than 5%, making it one of the top gainers in the Dow Jones Industrials. As we navigate this complex landscape, it's essential to consider multiple perspectives and potential risks. While some companies are experiencing significant growth, others face challenges that could impact their long-term viability. Welcome back to the Riskwiser Zone. As we wrap up today's show, I'd like to dive into a fascinating story that highlights the intricate relationships between politics, regulation, and the cryptocurrency industry. It appears that the Securities and Exchange Commission, or SEC, has been criticized by House Democrats for its handling of enforcement cases against crypto firms. The lawmakers allege that the SEC's decision to dismiss cases against exchanges like Binance, Coinbase, and Kraken may be linked to the substantial amount of money these companies contributed to the 2024 Trump campaign. The letter signed by Maxine Waters, Sean Casten, and Brad Sherman raises concerns about the SEC's priorities and effectiveness, suggesting that the agency's actions may be creating a pay-to-play scheme. This is particularly interesting given the crypto industry's significant lobbying efforts, which have resulted in bills like the Genius Act and the Clarity Act aimed at providing regulatory clarity for the sector. On one hand, it's understandable that the crypto industry would want to influence policy and regulation to create a more favorable environment for growth and innovation. On the other hand, the potential for undue influence and corruption is a serious concern that warrants scrutiny. The case of Tron founder Justin Sun, who has ties to Trump-affiliated crypto tokens, is also noteworthy. The court's decision to stay his enforcement action rather than dismiss it entirely may be an opportunity for the SEC to demonstrate its commitment to fairness and transparency. Ultimately, as investors and citizens, it's essential to remain vigilant and critical of the complex relationships between power, money, and regulation. As we navigate the rapidly evolving landscape of cryptocurrency and blockchain technology, it's crucial to prioritize caution, prudence, and a deep understanding of the risks involved. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.